Hi and welcome to the Market Alert for Tuesday the 4th of May 2021. So yesterday was a bank holiday in the UK, long weekend, but despite this the futures managed to jump on the first day of May in a quiet session. We'll look at that in more detail in just a moment. Interest rates going forward will be led by expectations on the tapering from the Fed rather than by inflation. So that means they're going to allow hyperinflation and it won't affect interest rates. To try and temper any sort of inflation that Volcker used back in the 1980s when interest rates went up to 18 or 19%, if I recall. Yeah, so again, this is another sleight of hand by the Fed. And gold is laughing at Powell. Yes, a good day yesterday. Don't hold your breath, though. A good day on the upside is generally slammed the next day by the bankers. So what they're saying here is that gold sees through the Fed speak and track facts rather than fictions. Well, if that was only the case, it would be good. Unless I'm being slightly pessimistic here, you'll see what I mean in just a moment. And here's the inflation. Soaring lumber prices add nearly $36,000 to the price of a new home, and soaring lumber prices are exacerbating the house's affordability and putting the American dream of ownership out of the reach of millions of households. We haven't got going yet, have we, with all this hyperinflation and the shortage of goods, which we've seen particularly in the semiconductor area, and this is just going to get worse going forward. This is the Fed's attempt to hyperinflate the way out of the debt. The yield is, it says 1.60 there, but we don't seem to have a lot on the chart. Let me just refresh the chart, see what we've got here. How strange. Are the bond markets closed today? Yeah, looks like it's something odd there. Don't know what's going on here unless the bond market's actually closed, but the yield hasn't been updated since last night. Yeah, very strange. So I'll come back and have a look at that later. And news. Well, there's no news today. Very quiet day news front wise. Let's have a look. We've got EU forecast tomorrow. More central bank news on Thursday with the Bank of England. It's normal, all Bank of England on Thursday. Friday we go back to the ECB, and of course this week we've got the biggie. The biggie this week is the non-farm payrolls. They're out at 1:30 on Friday. So let's have a look and play catch up from the weekend. So Friday saw the market again showing huge buying pressure for the Dow. This moving up yesterday to 89%, stopping there, and then overnight prices weakening. But again, you can see we're still stuck in this sideways range. Despite all of the earnings for the first quarter being spectacular, the market is still not broken out and made a new high, and this seems to be a picture across the board. And yesterday's Dow session, you can see, because of the UK being closed, allowed to move the market up. We then got an 89% retracement on the upside. To the downside, we double top, and then the market coming back and a small retracement before going down after the close. The DAX, I can find it, is here. And in the daily chart, you can see that we're red in the DAX, below the 20-bar moving average. Price is managing to come back up. Yesterday, we had some buying support there, some demand on Friday, reversing the market. But now you can see we're getting into another sideways range here for the DAX. And in the 2-minute chart, yesterday the market just moving up nicely, coming back, putting in a retracement, and then moving, stopping at the R1 and then selling off, but then managing to come straight back during the mid-morning. Again, you've got a classic up, down, and then up to the upside there, where the market retraced back to where it made the high of the morning, and then traded sideways for the afternoon. Nothing to report at all despite the Dow actually moving up sharply. Overnight prices have been in a 50-point range here. This is an interesting one. We can see that prices have traded from this psychological level down to this one, which is 15,250 down to 15,200, and the market currently holding at this level. Let's just have a quick squeeze of the chart. So price is trading at the DP. We're about 120 points from the high and a few more to the low there. So the low side, if the prices get down, giving more than the upside at the moment, and also given the fact that the market is looking weakish. But of course that can soon turn around once the futures market opens at 7 a.m. So more or less floating around there in the middle at the moment at the DP. So again, it's going to be down to the futures market to see whether prices will manage to spring to the upside or move to the downside. But we're certainly in May now, and the old adage of sell in May, go away may be starting to happen there. Let's have a quick look at the implied volatility. And in the implied volatility, we're down from 1439 to 1403, and that's because, as the headline stated earlier, that we had a quiet session there. So we have implied volatility still in that same area. You can see that this too is actually coiling in a sideways move. So we are due for a correction in this market. Okay, that's it for this quick catch up and bring us all up to speed on where the markets are currently trading. And let's see what happens during today's session as the markets... Oh, actually, I forgot. I haven't looked at the metals. Let's have a quick look. And we can see that silver had a really good day yesterday to the upside. But like I say, don't hold your breath. We're already starting to see it being hammered back to the downside by the powers that be. You can see it already drifting slowly. So I wouldn't be at all surprised if this doesn't continue to the downside. But then I have been surprised since we got into this sideways move, expecting the market to be hammered to the downside, and it's so far failed. And I think this is after many, many, many years of seeing the optimism being removed very quickly when we get some sort of an up move. Even last year, even though I managed to pull out 500% in some silver ETFs up to this point, once we got to the high, well, it just did absolutely nothing. Traded sideways, and then of course we come back to February when there was speak and talk of cornering the silver market by the Reddit mob again, which I said would fail miserably, and it is. But although saying that, as we saw in Friday's market alerts, the actual physical demand is massive now, and I've said that all along. The only way you'll break the COMEX is to actually buy the physical. You'll never do it with SLVs or ETFs or futures markets or options contracts, because they have the wherewithal and the funds to do whatever they want to do with the derivatives. But the physical, different ball game. So fingers crossed, people will continue to buy copious amounts of the physical silver and drive prices higher. But at the moment, like I say, we're down on the overnight. It depends how far back it comes. If it comes back to the 5 bar, there's a chance we could move to the upside. But like I say, I am actually a natural optimist, but for many, many years, the hammering of the silver price, I remain cautious on whether they will be able to get this high. Like I've said before, and I'll say it again, if we get above $30 per ounce, then I will be very, very happy. But until that point, we remain in the monkey hammering zone, as I call it. Okay, that's it for this one. If there is anything to report, I'll let you know. But as ever, thanks for watching. See you in the next one.